I'd like to welcome the audience. We are very grateful that you have chosen to share some of your busy day with us. We know that your time is valuable, and we'll honor that today with what I'm confident will be an engaging 60 minutes or so of discussion. Once again, our topic today is heading towards a new normal. Are eMortgages part of your plan? Our sponsor today is Freddie Mac. Our host today is National Mortgage News. My name is Mike Sisk. I'm a contributing editor at American Banker. I will be your moderator today, and my articles have also appeared in Barron's, Cranes North Business, Inc., Institutional Investor, Strategy Business, and Worth. And I'm very pleased to introduce our four panelists today. Lily Matutaya is VP of Closing and Funding at Evergreen Home Loans. Nancy Alley is VP Product Strategy, eMortgage Technologies. Raj Penuganda is Product Development Director, Product Delivery at Freddie Mac, Single Family Division. And Terry Pansing is SVP Corporate Closing, Fairway Independent Mortgage Corporation. And we are very, very delighted to have all four panelists with us here today. And just before we jump into things, I wanted to reiterate one quick point made in that opening segment, that we do have time at the end for Q&A. We try to set aside 10 minutes or so, and you can put your question into the queue throughout the hour. Don't have to wait until the end, and we'll make every effort to get to your question. And if we don't get to it, we'll definitely follow up after the program. So please definitely ask away. We very much want to hear from you. And let me quickly also share the agenda with folks. For some reason, I'm not pushing to the agenda. Adam, would you push the agenda for me, please? Thanks. All right. So we are going to start off with why eMortgages. We'll be talking about industry trends and benefits. Then we'll be moving on to implementation, approaches, challenges, and best practices. Then the Freddie Mac approval process, e-closing with no e-note, closing with e-note, and e-closing with remote online notarization. And we'll also have closing remarks from everyone. And then, of course, that Q&A section that I was just mentioning. So that is our agenda for today. And okay, good. Hopefully I can move these slides along now. For some reason, they're not doing it. Adam, would you please move to the next slide for me? I don't know if, yeah, excellent. Thank you. All right. So the way we're going to kind of run this today is I'm going to have a couple questions that I'm going to ask throughout the hour, and all of our panelists are going to be sort of chiming in on them. So, to kick things off, so there was a lot of media coverage in the last couple of years about eMortgages, and since the pandemic is largely behind us and life is returning to new normal, I'm wondering, where do you think eMortgages are going? Is now the time to get on board with eMortgages? What are the biggest net benefits for lenders? And for this question, I guess I was hoping to start off with Raj. And let's move that slide to the next one, please, Adam. Thank you so much. Raj, the floor is yours.
Hey, good afternoon, everyone, and thanks for the question, Mike. So, as you indicated, there was a spike in interest in electronic closings that include e-notes, i.e. eMortgages, in 2020 and early part of 2021, mainly in response to the COVID-19 pandemic. But as an increasing number of people becoming comfortable with in-person transactions, right? Some of the people thought that there will be a decline in the interest in electronic closings, but I am not seeing any slowdown in the e-closing or e-mortgage adoption from where I sit. So as shown on the slide here, number of lenders implementing e-mortgages has been steadily growing over the last 5 years, and with this year being the highest. So more than 50 lenders have implemented eMortgages this year as of September, right? So again, no slowdown I see from an implementation standpoint. And I believe this is driven by the lenders' desire to meet their consumers' demand for speed and convenience in the closing process. And in fact, according to some numbers published by or I should say the information published by Mercy Registry, currently there are 180 lenders and 38 warehouse lenders that have implemented eMortgages, in addition to several major servicers and sub-servicers. And from a secondary market standpoint, Freddie Mac, Fannie Mae, Ginnie Mae all accept eNotes, and also 7 federal home loan banks accept eNote as collateral. So as a result of all of this growing support from the ecosystem, we see an increasing in the e-closing volume and also the eMortgage volume. Right? Last year, 5.2% of all loans we purchased were eMortgages, and some in the industry believed that as the market shifted from refinance to purchases, right, there will be a decline in the eMortgage volume this year. But this year so far, 5.4% of all loans we purchased are eMortgages, so that's a slight improvement compared to last year. And from the standpoint of the absolute numbers, right? I agree that the number of eMortgages has has gone down compared to last 2 years, but that is mainly because of the overall mortgage volume. The levels in the mortgage volume in the industry currently, which is at a historically low level, right? In the if you look at from the last decade or so, right? So that decline in the overall mortgage volume has definitely led to reduction in the eMortgage volume as well. But even even at that level, it is still higher than where we were in 2019. So, and again, in addition due to the growing support from electronic notarization and remote online notarization perspective, we see a growing number of full e-closings. Last year, 8% of all eMortgages we purchased went through full paperless closing or full e-closing, and this year that number has jumped to 19%. So, in summary, what I'm trying to say is, I don't see any slowdown in either implementations or in terms of the number of electronic closings, and those lenders that are not offering electronic closings as an option to their customers are clearly missing out on the opportunity to meet the customer's demand for speed and convenience in the closing process. And also they are missing out on operational efficiencies. And as lenders that have been offering electronic closings to their customers for quite some time, I think I would let Terry and Lily talk about those benefits that they have realized due to this implementation. So Lily or Terry, one of you can talk about the benefits.
Sure, I'd be happy to kick it off, Raj. This is Terry. Can you hear me okay?
Thank you. Yep,
we can.
Perfect. Well, thanks to National Mortgage News and Freddie Mac. I'm thrilled to be here. And Raj, I would echo a lot of the sentiments that you had. For us here at Fairway, the demand for eMortgage, spiked up dramatically during the pandemic. But I would also tell you that since that time, we've continued to see the volume and the demand for eMortgage climb month over month. In fact, since the pandemic, each and every month, we've seen our eMortgage numbers go up every month. And, I think to the point that you made, borrowers are asking to have the ability to do eMortgages. They like the technology. They've grown accustomed to doing business that way since the beginning of the transaction. Contracts are signed that way, applications, initial disclosures, so on and so forth. And, they like that experience and want that experience at closing. So I think for us, a lot of it is about how we serve our customers at closing, giving them that choice, giving them that flexibility, and giving them that digital option. I think there's also a lot of the operational efficiencies that I know we'll talk about more, particularly since and beyond the pandemic, the ability to move the transactions to the warehouse banks and the agencies much faster, the reduced errors, no lost documents, just a faster and cleaner process all the way through. Lily, I'll pass it over to you.
Thanks, Terry. I agree. I mean, everything that you shared with all the benefits that it gives our customers, as well as the efficiencies that adds to our operations workflow. I mean, for Evergreen, we are in our expansion phase of our eNote project. We successfully helped 7 of our warehouse bank lines complete their eNote approval process, which took us 2 years to do since we implemented in 2020. And we are also reaching out to our investor partners to offer our help to get them started if they're not yet, if they have not yet completed the eNote approval process. Echoing what Terry was sharing earlier, on average, 86% of customers preview their closing docs before they e-signed, and so they appreciate having that option and the convenience for their schedules. I started back in '98 in this industry when we were funding by paper packages, and so fast forward to where we're at now. In 2 years, we're doing e-signing of our closing documents, e-signing the notes, and e-notarizing. Counties can even e-record. So, today, right now, this year is a perfect time to get started if you haven't. There are so many moving parts and parties involved when it comes to implementing an eNote, from your investors to your warehouse banks, the vault for your eNotes, as well as MERS for e-registering. So there's benefit cost to the borrowers and lenders. In the last 3 years for us, when we implemented in the middle of the year of 2020, we had a cost savings of 7% in our collateral shipping cost. And in 2021, we had an increase to 32.5%. And year to date so far, we're at 40%. So there's definitely some efficiencies in operations to add to that. And, change is inevitable, and I believe to embrace in order to grow in this industry as a whole.
Let me just ask a quick follow-up. I mean, so as the market's shifted significantly to the purchase market, is it impacting your ability to offer eMortgages?
I can go ahead. For us, it's fair. Go ahead, Lily.
Thanks. For us, we have been doing eMortgages on both purchases and refinance since implementation in 2020. Because we rolled out doing hybrid closings first in 2018, that process helped us better prepare for implementing eNotes in 2020 when it was much needed. From our research, we identified what types of loans were eligible, and worked with our LOS system admin team to put business rules in place to help automate that process, and collaborated with our digital closing vendors to set up the e-signing steps and process to make it seamless for the borrowers.
Absolutely. And to just build on what Lily said, I would agree with you. As we moved out of a refinance market into more of a purchase-based market, purchase season, a lot of it was about building that trust, building the trust with our loan officers, our network, our settlement agents, as well as our borrowers and their real estate partners. So, I think for us in the eMortgage process, it really started with building a solid process and building the trust of our counterparties as we went along. I think the thing that we found in the purchase market, is on closing day or signing day, the borrowers, there's obviously a lot of anxiety. There's a lot of things going on. They're going to the bank. They're doing their walkthroughs. They're meeting, moving trucks. A lot of anticipation, a lot of anxiety. And I think the biggest thing that we found with the eMortgage and eClose process is it takes that anxiety away. The borrowers have the ability to get up on signing day, as Lily mentioned, and oftentimes preview or review those documents either the day before or the day of and sign those documents. Even though it's a hybrid e-closing, it takes a majority of those documents, get those signed, get them out of the way, and takes a lot of anxiety out of the signing day. And we find that the borrowers really want this technology and look forward to even more as we move into a full eMortgage transaction or a ROM-based transaction. So it takes a lot of anxiety out of the signing day. And we've really worked very hard to build the trust of our network, particularly our loan officers, that it doesn't matter if it's a refinance or if it's a purchase. There's still so many benefits to the eMortgage for everyone.
Yeah, and Mike, if I might ask, this is Nancy. I have the luxury of looking kind of across lenders on our eClose platform. And despite volume going down and the shift to purchase, we're seeing their uptake or utilization. So the percentage of loans they're closing electronically has consistently increased month over month this year. So I would echo what the ladies are saying as well.
Excellent. Excellent. It's awesome the purchase or refi doesn't make a difference in terms of offering eMortgages. So Terry, can you share some details on how Fairway approached eMortgage implementation?
Yeah, so for us, we've been doing eMortgage for about 5 years. So I think the first thing is to, really get educated, identify the subject matter experts within your organization that are going to participate. For us in each and every department that's impacted by eMortgage, we have a subject matter expert, and we still collaborate 5 years later, working together. That's in the closing side, it's in the collateral side, the shipping side, the secondary side, warehouse. So identifying who are all of those subject matter experts and counterparties within the organization. Of course, it's identifying that eVault is working with your warehouse partners, as Lily mentioned, your correspondent partners, bringing them along. Oftentimes it's helping to educate them, and it's to have a clear testing process, because you'll begin testing each and every one of your correspondent partners, your warehouse partners, your agency partners, and MERS. So, I think the biggest thing is, one department cannot do this alone. It takes all of the departments that are experts in eMortgage work together, and then working with your outside counterparties to get them set up to be able to accept eMortgage on behalf of your organization. So it's an internal-external approach, and while doing all of that, of course, working with our network, our loan officers, processors, and closers, title partners, right? It's bringing everyone into the transaction that has a stake in the success of eMortgage. And that's everyone from, internal departments to, your external parties, your settlement partners, and then, of course, your borrowers as well.
Excellent. Excellent. Thanks. So, Lily, how did Evergreen approach eMortgage implementation?
We started our journey back in 2015 after we had implemented our new LOS system at the time, and saw the adoption for e-signing initial disclosures. Tamara Rieger, our company president, wanted to challenge ourselves, and since we were already doing paperless funding, why not make the process more, why not enhance the customer experience with e-signing and making the workflow process more efficient for the operation side. So with that in mind, digital closing became a company initiative. We reached out to our agency contacts for their help on how to get started. And one of the best tools and resources we received was the Freddie Mac's initial eMortgage seller questionnaire, which also led us down to the MERS e-registry, integration procedures and testing form, as well as there's list of approved vendors, banks, lenders that are involved in the eNote approval process online for MERS, so that the research process is less daunting. The meeting with our agency helped us make a business decision to start with hybrid closing first. So we implemented and rolled out in 2018, piloted for about 4 to 5 months, and then started the company rollout and completed it by the end of the year. So for the full year of 2019, we had closed over 5,000 e-signed transactions, and that's what motivated us to get eNotes up and running in 2020, which again was, couldn't have been a better timing during the pandemic. So we were very fortunate to successfully get scaled on both hybrids and eNotes in the last couple of years.
Very interesting. Thank you. Thanks for that. Lil, let's stay with you. So based on your experience, where should lenders start the conversation? Are there any best practices that you can share?
Start the conversation with the internal team, meaning it needs to be supported at the executive level from the top down. Clear communications to the company regarding the initiatives and goals to set the expectations and help gain support and adoption from everyone, especially your sales team. Use a PMO to help with the project to ensure tasks are completed and meeting timelines for your pilot start dates and company-wide rollout. Next, reach out to your agency contacts to help provide some guidance and any tools and resources they can share that may help you get started, like the forms I mentioned earlier. Then you'll need to assess your workflow, what your steps and processes are, and make a business decision on what would work best for your team involved in the process. It's important to have best practices for your team as your doc dryers and funders. Set up a workflow that is required for for everybody to follow to ensure consistency. And then just having tools and resources available to help educate not only your internal team, but your external team as well, because it's a collaboration with our escrow partners. We also put together video demos so that the borrowers can have a visual of what that borrower experience will look like. And last, make sure to involve your company marketing team. That they can help create the buzz on social platforms as well as internal to create that buzz and get everybody, excited to, support this company initiative.
Fantastic, Terry. I'd love to get your sense on this as well.
I love that, Lily. Create that buzz. So many great steps and talking points for people based on your experience at Evergreen. That's fantastic. I think for us, it lines up, quite a bit with what Lily said, but understand and really be committed to what's your why, and identify the metrics that you want to measure. For us, obviously, definitely the borrower's experience, at the front of mind, and same thing for us. We started with a hybrid transaction, and of course the eNote being very important. Leverage the partnerships. I totally agree. Freddie Mac's been an amazing partner. Simplifile's been an amazing partner to us. But for us, then it became clear that we needed to identify what metrics that we wanted to measure. How long does it take for paper notes to deliver? How long does it take for eNotes to deliver? Start talking about and looking at the various areas that you can, measure and monetize the cost savings. Not only, in people, in reducing the errors, in actual savings. I think it's really important because that helps pick up a lot of that momentum as well. You want to continue to keep those metrics and understand what those metrics mean, and really hone into, what is your why, what is most important, and as Lily mentioned, get the buy-in from the counterparties throughout the organization.
Hey, Mike, let me jump in and add a couple of things here.
Please.
So I agree with everything that Lily and Terry, have said so far, and they have been a great partners for Freddie Mac in this journey. So Freddie Mac has put together a 5-step implementation roadmap that you can find within the appendix on this presentation that it will be available to, audience after the, recording is done here today, right? And then one thing that I have noticed is the most successful lenders are those that think about eMortgages or e-closings as a process rollout, not as a technology rollout. They define early on during the implementation what the desired experience is for customers, internal associates and settlement agents and other partners. And then they try to map their current process and see where they need to make changes to achieve the desired process outcome, right? I think that is the key, and that is what a lot of these successful lenders have done to understand where they want to go, what their desired process experience should be for each of the stakeholders, and try to methodically make those necessary changes before they roll it out across the organization.
Excellent. Thank you, Raj. And Okay, now we've not heard enough from Nancy yet. So, Nancy, I know ICE is very involved in eClose and brings some different perspectives given its simplify and merge units. Anything else we should be thinking about here?
Yeah, no, first, glad you asked. There's a couple points I'd like to drill down a little further, but I'm super encouraged listening to Lily and Raj and Terry because all the stuff that they mentioned are the ingredients of where I've seen lenders really be successful. So certainly not going to counter anything that they said. They hit all the key points that we talk about. Raj's last point around process change versus a tech implementation, I couldn't underscore enough. At ICE, we talk about this is change management, right? And thinking about that in all the areas that it touches, which I think we heard from both Fairway and Evergreen as well. So, but there's three areas. The first being settlement agents. I heard both Terry and Lily mention this. They're critically important to a lender's success in eClose. Matter of fact, you can have the best technology out there for eClose and not be successful if you don't get this one right. So a couple things that I like to mention, obviously living in the Simplify house a lot of my time, I'm very close to settlement agents and the network. And so settlement agents are critically important here. Keep the workflow consistent. Just as I mentioned change management, you're going through change management in your organization. Don't move the cheese too much on your agents. Ideally, their workflow should be the same, whether they're picking up a paper package and downloading it or a complete total eClose RON package. Let them go get your loans as a lender in a consistent manner. However you decide that should be, but don't make it different for eClose. Involve your agents. I heard both Terry and Lily said that they had their agents involved. And I know we have the question, Mike, about moving to purchase. And so that's a little more challenging, right? You don't know necessarily who the agent's going to be. But whether you have a captive or a set of vendors you use consistently, even on refi, go ahead and involve them early. They're important stakeholders to this process. And then when you do roll out to your broader set of agents, you need to clearly communicate your expectations. I think where I've seen lenders be the most successful is they have set the bar that this is the way we're closing now. And if you want our business, you're going to, adopt eClose as well. When they make it too optional, it tends to be people don't like change and the agents might opt out. And then test and test and test again. And what I mean here is that don't just test with your internal teams. You need to be testing with these agents as well to have successful implementation. So obviously really high on involving the agents. The next area that I'd like to talk about is eNotes. So let me see if I can advance. I can. So eNotes, I was, obviously lots of good advice from Terry and Lily on this. I just wanted to boil this down to a couple key takeaways. I think eNotes still scares some people, or it seems overwhelming because it's a new way to, think about this document. And then we have this new thing called the Mercy Registry, and we have eVaults. It really can be very simple to add eNotes to your process. But there's a few things that I think you need to think about. One is educate your teams. I don't think they need to be experts on how eVaults work or how the Mercy Registry works, but they need to understand what changes in the process when you add a note. So it kind of goes back to that change management or the workflow comment. Boil it down so they understand the change. Leverage your vendor. Most of us are using, most lenders out there are using a third-party platform to eClose, which includes an eVault, which works with the eRegistry. Those vendors are absolute experts on how eVault team works, how eNotes work with the Mercy Registry. So leverage them. There are a wealth of knowledge, but don't just throw it over the wall. Make sure your teams are involved with the vendor and part of the project. Define your scope. I think it was Lily that said this. Where are you doing this? Are you an aggregator, or your correspondent channel is just buying eNotes? Are you originating eNotes? What channels? What channels are you going to be doing? What loan types? Are you going to focus on refi first because you think it's easier? Are there certain loan types you're not going to support out the gate? You need to have all that scoped out because you need to set goals on what you're trying to do. And if you don't know where you're doing eNotes, it would be pretty impossible to set goals and be able to measure your success. Don't forget your trading partners. So, when you go to do an e-note, you need to make sure your trading partners, your warehouse lender, your investors, they're all ready to do e-notes with you, and they have to be part of that testing journey as well. Often there may be an addendum to sign or some type of approval. And then again, just like I said with agents, don't forget your trading partners when you do round trip testing. And then define success, as I mentioned above, and set your goals. So I think one of the biggest mistakes, whether it's e-notes or even hybrid, that I see lenders make is they think it is a tech project, to Raj's point, and they think that when they go live, that's the end of the project. It's really the beginning, right? Now you've got to go get loans e-closed, and you've got to get production, and that's where setting goals and measuring, I think, really comes in. So, and then my last place I wanted to deep dive on is around post-closing. I feel like poor post-closing doesn't get enough love, so I like to bring in a little love. Don't stop going digital at the closing table. We focus on e-closing. The word itself is focused on, the borrower experience, but there is a lot of ROI, which you heard from both Terry and Lily. There's ROI here, and some of this can be picked up in in post-closing. Post-closing is just absolutely ripe for automation. And I like to hold out e-recording as an example. So e-recording is completely mainstream, well ahead of, it's even ahead adoption-wise probably of where we are with e-disclosures, which is shocking, or they're neck and neck. I think we're at something like 93%, but we're well over 90% of borrowers live in an e-recording county. So almost all your transactions can be e-recorded, and it is really the way the security instrument is recorded and probably ultimately released at the county. The other benefit is if you're e-recording, you don't have the requirement to deliver the paper security instrument to the GSEs. So it also creates some digital lift there. But there's other areas in post-closing that I don't think people think enough about. So I'm going hybrid. I still have some ink signed docs out there, right? How do you automate that? There are lots of vendors out there that can help you take that digital, where you can almost make that hybrid package feel like it's completely e, because it can look for missing signatures, missing pages. I know we do some work around Section E fees. When you e-record, you know immediately what was paid to the county, what were the final recording fees and transfer taxes at the county, and you can do some reconciliation against your Section E and your 3-day CD. So those are all things, and then that feeds into another workflow that you could kick off automation if there's a refund due or something else. And then digital return on the package to the lender. This seems like a no-brainer, but if you are doing e-close, you have to have a way to electronically collaborate to coordinate that closing upfront. You're already talking to your settlement agent in a digital means. Make sure you do the round trip. Make sure that either the eClose platform returns everything to you, or where you have inked documents, make sure your agent or your vendor is returning those documents digitally back into your LOS for you so that you can keep that automation going. So lots of good stuff, fun stuff in post-closing, and that's where really we can pick up some ROI.
Excellent. Thank you, Nancy. And I think that we're going to go from post-closing to closing remarks, actually, at this point. Raj, so let me bring you in. So eMortgage adoption is growing, but it is still a tiny fraction of the overall market. What needs to change to have lenders ramp up eMortgage production?
Yeah, great question, Mike. And it is definitely still tiny fraction. It used to be less than 1%, 3 years ago. Now it's around 5 to 6%. So it is definitely growing. So one of the main factors I think that is constraining lenders from ramping up their eMortgage production is the availability of limited non-GSE investor outlets. And this is very critical because not all lenders directly sell to the GSEs. And also in some cases, this impacts the pricing that lenders get in the secondary market for their e-notes, right? So definitely, more investors are accepting e-notes than a couple of years ago, but the progress is, very slow. And that is mainly because of the time it takes for lender, their warehouse partner, and their investor to, establish tri-party relationships. And that is definitely constraining e-note volume a little bit. But so we are, from a Freddie Mac standpoint, we are very focused on this issue, and we engage with various aggregators on a regular basis. And one of the aggregators that I was speaking to recently indicated that now they are currently, working on a project to actually ramp up their correspondent base. I think they were around 40, 50 correspondents that they are accepting e-notes from, and they want to increase it to maybe more than 100 or so. So definitely there is focus from some aggregators, and we continue to talk to them to understand their concern and educate them, and try to nudge them to accept e-notes. And then similar issue exists on the, I would say, in the e-note servicing buyer market. Right. Again, there is some progress. There are some major banks that recently have stepped into buying e-note MSR, but again, the progress is slow here. And as I mentioned earlier, when I was talking about electronic notarization, mainly remote online notarization, there is growing support, and that is leading to more volume of full e-closings. But there are some major population centers in which there is currently no support for remote online notarization, and that is impacting e-mortgage production because some lenders want to only offer full e-closings, otherwise they want to not offer e-closings at all, right? So such lenders, e-mortgage volume is definitely constrained by the lack of support of remote online notary support or electronic notary support. So those are the things I can think of, and I'm not sure Nancy or Terry, Lily, you have anything to add?
I think you nailed it, Raj.
Thank you.
I totally agree. Raj, I think is at least for us at Fairway, our numbers continue to grow month over month. But I think as we continue to see more correspondent investors, even more housing finance agencies, get all of our warehouse banks set up, right? As we continue to broaden that counterparty adoption, while again, as Nancy mentioned, we're working with Simplify on everything that she just mentioned, using all of the resources at our disposal to continue to bring that value back. I think lastly, I would say in addition to that, we're certainly very excited for remote online notarization, to have that national legislation that levels the playing field as we lend in all 50 states. But, be able to have that availability and that confidence that, I think remote online notarization will continue to expand, and the ability to do the full e-closing, as you mentioned. Still a lot of benefit to the hybrid transactions. For us, particularly the hybrid transactions with the e-note, the borrowers like it, benefits all the way around. So, don't count yourself out to, what some would just say, well, it's just a hybrid. It's not just a full transaction. You need to start somewhere. It's a very good place to start. There's a lot of benefit, and I think we'll continue to see that, the access and the acceptance of the transactions broaden with the various counterparts over the next year.
Mm-hmm. Yeah, very well said. Thank you, Terry.
If I was just to add, totally agree with everything that Raj and Terry have shared, and Nancy. It's a very hands-on process, and you really have to really mentally prepare yourself as well as your team to be able to support that. There's a lot of interaction that you're going to have to do with your escrow partners to make sure that they are aware that you're sending them over an e-note closing, so that, depending on how everything is set up in the digital platform that you're using, you might be preventing that note to be printed so that you don't end up with two notes, right? You want to be able to, if you're going to have an e-note e-signed, then you want to put guardrails in place in your digital platform to prevent that from happening. Videos, demos, that was one of the things that our sales team really appreciated, because they want to be able to see what the customer goes through so that they can speak to that with comfort, to be able to assure them that, it's a very easy process. And then just collaboration internally as well as externally. We had a lot of internal meetings, weeklies, up to the point of rolling out, starting with the pilot as well as when we rolled out company-wide, and making sure that everybody from the beginning of the loan to when it closes, and even to what Nancy was saying earlier with post-closing, making sure that they're also being accounted for what they have to do for when an e-note after a funding happens, and how does that work? Because of the transferring of the electronic note, it's not paper. So it's a collaboration all the way around, and as long as every communication is clear and the team is involved, I think you'll have a successful process.
Thank you, Lily.
Fantastic. So I think that Raj, what do you think? Should we go to questions? I think we've got some good questions here. I want to give the audience a chance.
Yep. Let's see what they have to ask.
Okay, good. So yeah, just a reminder, everyone in the audience, if you've got something on your mind, now is definitely the time to get the question into the queue here. But we've got some good ones here already. So let's just jump right in. So Raj, let me ask you this one. So we are new to this whole process. Could you please define a hybrid e-closing?
Yeah, sorry. That's a great question, though. I think being working in this space for quite some time, I think we all just were using a lot of terms, and Anyway, so hybrid e-closing is simply that in an e-closing process where you have some documents electronically signed and some are wet signed. In contrast, we refer to a full paperless process as full e-closing. So full e-closing versus hybrid e-closing is simply that in one process you have all documents electronically signed. In the other process, you would have some electronically signed and some wet signed. And the most common implementation today we have in the e-closing space is the hybrid e-closing, in which the electronic note and other electronic documents are e-signed. And depending on the electronic notary support within the jurisdiction, the security instrument and other notarized documents may or may not be electronically signed.
Excellent. Thank you. All right. Here's a question. Are the presenters direct sellers, or do they sell to aggregators? Terry or Lily, would you share with us that?
I can share with that. We do both. We service retain as well as we, commit and sell to our investors who are approved. So, as I stated earlier, we are in an expansion phase of our, project. We do have some aggregators already that are accepting e-notes, and we're also working with others that are not yet there and offering our assistance in if they have that on their roadmaps, and we are able to support them and help them with any testings as they need.
Excellent. Thank you, Lily. All right. Next question here. Let me ask Raj. So what are you seeing next on your roadmap for eMortgages as we close out 2022 and look to 2023?
Yeah, so from Freddie Mac's standpoint, we are definitely focused on educating the industry, and as I indicated earlier, right, there is limited availability of non-GST investor outlets, and that is impacting pricing in some cases, and it is impacting the ability to originate eMortgages in some cases. So we continue to conduct outreach to some of these non-GST investors and try to educate them on eMortgages. We also will undertake some of those efforts in the e-note servicing buyer space as well, and we have been doing that for the past couple of years, and that has definitely yielded some fruit, right? And we also work very closely with as we look to 2023, which is again something which we already do, but as we look to 2023, we continue to work with MERS e-registry to enhance the capabilities so that it can serve the needs of all different segments and various different transactions. Because as the industry evolves, as more and more stakeholders start participating in this e-mortgage process, there are new needs that surface. And so we are always, working very closely with MERS to enhance the registry to support those transactions. And then we look to, there are some transactions which we currently do not permit as eMortgages, like for example, New York CMAs, we don't permit them as eMortgages. Living trust loans are not permitted as eMortgages. So one of the things we want to do next year is to see if we could start permitting those transactions also as eMortgages.
Interesting. Thank you. Thank you. All right. Good. Next question here. So, and let me ask Terry this one. What feedback do you receive from your borrowers on eClose transactions? Do they like it?
Great question. Yes, we get a lot of feedback, and I think it's really important to continue to assess and receive the feedback, not only from the borrowers, from settlement partners, and from loan officers, but to your point, or to that question from the borrowers, we're constantly getting feedback from them. And I think, as I mentioned earlier, the biggest thing that we get from the borrowers is it alleviates a lot of stress on closing day and some of the anxieties. It's convenient. Convenience is a big one. Ties into digital, doing all things, digitally. They like to do that. And one of the things I would tie into that Raj mentioned earlier is the accessibility. We want to make sure that e-closing is accessible for all, right? We do find a lot of borrowers that, their smartphones, is their primary utilization device for computing, for getting on the internet, and, to be widely accessible and easily accessible to something, like even a smartphone device. We've got a lot of borrowers, they're on their way to, the signing or to the walkthrough, or they're at settlement, or they're able to do it, beforehand, first thing in the morning. They tell us a lot. It's fast, it's convenient, it's accessible, and it makes that signing day a lot less stressful.
Very interesting. Thank you. Actually, Terry, let me stay with you. I've got another question here. In purchase, actually, I don't know what this acronym means. TXNS. In purchase, TXNS.
Transactions. It's a
transactions. Okay, thank you, Raj. I was struggling with that one. Okay. In purchase transactions, do you see any resistance from real estate agents, or are they now on board with less time or no time at the table?
That's a great question. We had that come up a number of years ago, that settlement agents really thought that it was going to take away from, their celebration, right? Going to, bring them that congratulations, that, welcome home gift, right? That was their opportunity to really share in that celebration with the borrowers. Of course, the pandemic changed all of that, right? Our loan officers used to go to closings as well. And, the pandemic came around, and that changed everything on a dime. But, now as we're talking to real estate agents, yes, it changes what that celebration looks like. But again, I think they also realize, to what I mentioned before, it changes that dynamic or that settlement experience to a very different one that is, shorter in duration, more concentrated, less stressful. Borrowers are more prepared, right? So it's more of really that celebratory experience. And, likewise, I would also add that our settlement agents, I think, were a little bit concerned that we were trying to take these closings away from them, that they were going to be losing business, and they were a little bit resistant to change. But I think that tide is shifted as well, that our settlement agents now look at it and say, okay, so if my closing is less than half on an eMortgage transaction than on a paper, I can do more closings in a day. So they're jumping on board, loving it as well. So, I think the voices that we're hearing are loud and strong, that, like I said, less time, more convenient, less stressful, very accessible, and, want to do it that way more and more.
Lily, is that what you're finding as well?
Yes, echoing on what Terry said, our escrow partners are telling, even the sellers like to do the wrong signing. They prefer to be able to have that convenience. to be able to quickly go online and be able to do, but in a lot of theirs, we're hearing from our escrow partners that the sellers love to do a RON signing when they have a transaction. Borrowers love it too. We have a survey that goes out at the end of every transaction, and we get a 4.9 out of 5-star review from our customers on their e-signing experience. It's about the convenience, the flexibility. Those two things matters to our customers. Not having to get into a car and drive in traffic, or scheduling time off from work, or using up their PTOs. A lot of those things are very important to us, and in this age and time. And we definitely want to be able to provide those options to our customers so that they feel like they have control over their day. And of course, making sure that escrow has all the support and providing them with all the information that they need to be able to, have that easy signing. For the minimal set of documents. So what I hear from our escrow partners, the agents love it. While it takes away that celebration for the moment, but when the pandemic hit, that shifted a lot of the normal, right? So where we're at now is we're in this transition of a hybrid signing and closing process, and customers, that's kind of where I think things are at, is people are looking for that convenience and flexibility when it's available to them. So,
and I think, Lily, the other thing that is that people are liking having choices. Yes. Choice on how they're going to close and what that closing experience looks like, I think, is going to continue to evolve in the next 12 months of how do you want to close, right?
Yep.
Yeah, and if I might add on this one too, if you're going to a RON closing, I don't know about all the platforms, but I know several of the platforms, you can still invite that realtor or your loan officer to join the RON session. So they can still be there, and there can still be a face in that session. It doesn't have to just be with the notary. So I think there's still ways to have that personal touch when you get all the way to a RON. If it's a hybrid with an e-note, there is still a closing anyway, so they can go to those. So I think we're seeing less resistance from real estate agents than we might originally have thought. There's options.
Totally agree, Nancy.
And RON is 24/6. They can sign at any time, any day. Even when you're out of the country, as long as it's approved at a state that's allowed to do RONs. So just adding that 2 cents there.
Flexibility and choices. Excellent. And let me see, I've got another good question here. We're getting close to the top of the hour, but I think I've got time to squeeze in another question or two. So Raj, we are currently conducting hybrids. Where can I find the guide checklists mentioned to move to full eNote and RON? Okay.
Yeah, so can I advance some slides here, because there is a slide in the appendix here that has the, let me show you this slide here. So this link here is where you can go to, which is on freddiemac.com. And this has the eMortgage requirements and other checklists. And also there is my team email box, eMortgage_team@freddiemac.com, that you can reach out to, and then we'll be able to guide you through this process.
Fantastic. All right.
Yeah, and if they have, Mike, if they have questions on specifically to eNotes and what warehouse lenders or what investors and things like that, there's a lot of information on the MERS website as well, which is www.mersinc.org.
Fantastic. Actually, I think that's a really kind of nice note to end on. Everyone in the audience, I want to just let you know that we will definitely be following up with everybody here with an email that's going to have a link to a recording of this event and information about how to kind of tap into some of these other resources that we're discussing here. So that's all going to be coming your way. I want to thank the audience, of course, for being here. I want to thank Lily, Nancy, Raj, and Terry all. This has been a really interesting panel. I've learned a lot, and I can tell by some of the comments that I've seen come through from the audience that it's definitely content that's resonating with folks. So thank you, the four of you, for being here and sharing your expertise with us. And with that, I think I will officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again here very soon. Thanks so much.
Thank you.
Thank you.